Ever wondered why mortgage rates seem to have a mind of their own, with ups and downs more thrilling than a roller coaster ride? Well, welcome to the economic circus, where factors like the job market, inflation, consumer spending, and more all come together to play their part in this grand spectacle. Now, allow me to introduce the ringmaster of this circus, the Federal Reserve, or as we fondly call it, the Fed. You might have heard its name being thrown around quite a bit, especially since it decided to raise the federal funds rate in early 2022. You see, the Fed thought that this would be a great way to cool down the economy and keep inflation in check. Little did we know it would send mortgage rates skyrocketing, turning our economic circus into a high-flying trapeze act. So the next time you wonder why mortgage rates are what they are, remember this economic circus? Let's take a trip along the inflation graph, shall we? Buckle up, it's going to be a bumpy ride. Picture this. Early 2022, inflation spikes like a jack-in-the-box that's had too much coffee. From there, it's been a wild journey, with the rate stubbornly hovering above the Federal Reserve's cozy 2% target. Despite our best efforts to bring it down, it's still lounging around like that one-party guest who overstays their welcome. This stubborn inflation rate isn't just an economic party pooper, it's also a puppet master for mortgage rates. You see, as inflation struts its stuff, mortgage rates are compelled to keep up with the trend. Think of inflation as the diva of the economic world, demanding all the attention and setting the pace for all the other financial elements. So the moral of the story? As long as inflation continues its diva behavior, mortgage rates will follow suit. Brace yourselves, folks, we're in for a roller coaster ride on the economic tracks. Now, onto the million-dollar question, will mortgage rates ever chill out? Let's dive into the crystal ball of expert opinions. Some market gurus, after diligently sifting through the tea leaves, whisper that inflation might finally get a grip. This could allow the Fed to possibly, maybe hopefully lower the federal funds rate later this year. But hang on, it's not all sunshine and rainbows. Mike Fratantoni from the MBA warns us, we expect mortgage rates to drop later this year, but not as far or as fast as we previously had predicted. So here's the deal, trying to time the market is like betting on a three-legged horse. It's risky business. Instead, if buying a house feels right for you, then by all means take the plunge. Embrace the thrill of the unknown. In the end, mortgage rates are as unpredictable as a plot twist in a telenovela. If buying a house feels right for you, ignore the economic noise and dive in.